If you're a dividend investor and you've never heard of Hayford Peirce, you need to hear this story. The story of Hayford Peirce is probably one of the most emblematic in the dividend investing world, showing dividend investors just how powerful dividend investing can be. A science fiction writer by trade, Hayford Peirce was the man that in less than 50 years turned 12 stocks, a bond, and an annuity from $14,000 income per year into a $146,000 per year income portfolio. But let's rewind a little. In 1995, Hayford Peirce sat down in a Tahitian cafe. He was 53 years old. Armed with a legal pad and a pen, he started writing down his list of stock investments and their dividend yields. Hayford had two main groups. The first one was about a dozen of high-yield but slow-growing stocks such as utilities and high-yield bonds, which he called widows and orphan stocks. The second group of stocks, 7 in all, overlapped a little with the first. But these companies were comparatively high growth, with a long history of increasing their dividends every year. All of them were well-known blue chips. Coca-Cola, General Electric, Johnson & Johnson, Kellogg, Merck, Pfizer, and Philip Morris. Philip Morris back then was Peirce's largest holding by far. While writing his numbers on his legal pad, Hayford calculated that a high-growth portfolio would pay him about $14,200 in dividends in 1995, which by the end of the year ended up being a pretty precise estimation, since he received an actual payout of $14,267.50. Happy with his dividend but eager to project the fruits of his portfolio onto a future estimation, he said, "These suckers are bringing in $14,200 in income this year. Let's see what would happen if we just increase the dividend by 10% every year for 30 years. And with this, his 30-year plan began. Assuming a 10% growth every year based on a $14,200 income in 1995, Hayford calculated a total income after 30 years of over $250,000, which became his goal. Fast forward to 2017, 22 years later, one of the last times in which Peirce expressed himself on the matter, the dividend payouts had increased 8.62% annually over the previous 22 years, paying him $86,611.76. That's shy of his goal of 10% per annum, but it's been enough to make him a dividend millionaire. And all of this without ever adding any principal to his investment and without reinvesting the dividends. The whole point of owning stocks is to live on the dividends, said Hayford to the Motley in 2018. We all know that because of the power of reinvesting them, dividends are return accelerators. But Hayford needed the quarterly checks. Reinvesting is just fantastic, but I can't afford to do it, said Hayford to a reporter. In 2017, his portfolio was composed of exactly 12 high-yielding stocks, a bond, and an annuity. 3 were common stocks: Altria, Johnson & Johnson, and Philip Morris International. 9 were master limited partnerships: Allianz Resources, Bridge Energy, Energy Transfer, Enterprise Products, Energy, Kinder Morgan, Onyok Partners, Plains All American, and Suburban Propane. 1 was a bond and 1 an annuity. That's it. In total, from 1995 to 2017, Peirce's dividends alone had paid him more than $1 million. $1,148,079.84 to be exact. That's $49,916.51 per year on average. His investment in Altria is a particularly incredible story. Hayford began buying shares of the tobacco company back in 1987. Over the years, he kept buying more in 88, 91, 96, and 97. And eventually accumulated 11,000 shares of Altria, then known by the more familiar Philip Morris name. Every time there was a panic in the market about Philip Morris, and it would go from $70 down to $20 because of a smoking case, I would go out and I'd buy some more, he said. Because of several spin-offs, his original 11,000 shares of Altria stock turned into an astounding 11,000 shares of Altria, 7,000 shares of Kraft, and 11,000 shares of Philip Morris International. This obviously doesn't mean that I'm suggesting you buy stocks of a tobacco company, but it just comes to show the power of dividend investing when applied to companies that also yield long-term growth. And Hayford got that result without ever adding principal and without ever reinvesting his dividends. The beautiful thing about long-term dividend investing is that this beautiful 2, 3, or 5% dividend yield that these stocks give actually represents a much better dividend yield if you calculate it on the sum you actually paid on the stock originally. In 2018, Hayford measured his dividend checks of Altria against the original cost basis that he paid when he bought the company, rather than against the current share price. By then, Hayford was getting a 37% yield on Altria and a 28% yield on Philip Morris International. Imagine making a single investment in a dividend stock and 20 years later it's giving you 30% of your original investment every single year in dividends. Although Hayford Peirce died in 2020, not being able to see the whole 30 years of his dividend investing plan come to life, there is a lot we can learn from his investment strategy. Hayford Peirce made a plan. He created a long-range plan for 30 years and followed it like a commandment. Many small investors don't have a plan. They seek high-yielding dividend stocks, living year after year without really seeing the long term. According to the 2017 Retirement Confidence Survey, only 41% of people say they've ever even attempted to calculate how much money they will need to have saved so that they can live comfortably in retirement. If you don't want to be like these people and you want to finally calculate it, this video will walk you through all the steps in an easy way, and you'll find it also linked in the description below. Hayford Peirce tracked his portfolio and dividend income with spreadsheets every year, but he refrained from making a common bad investor mistake, constantly buying and selling. After all, why would he kill his results with taxes and trading expenses? Besides that, Hayford managed to pick good high yield and dividend growth stocks, and all of this without apparent training. And let's not forget, luck also played a role, since Hayford was born into a wealthy family. But that helped him start his portfolio, not making it grow so fast in 20 years. Of course, there is a built-in flaw to Peirce's plan, and it's also been his major regret. He'd have reached a much higher income if he reinvested back all those dividends. My underlying problem has always been that I didn't have enough other independent income so that I could invest my dividends. If I could have done that over the past 22 years, I imagine I would be worth maybe 10 million today, said Peirce in 2018. For investors, time can be much more important than money. A dollar invested early in life and allowed to compound is worth more than a dollar invested later in life. Staying invested is key. You might want to enjoy your dividends in early life, but if you do, you need to know what you're losing. Thank you for watching, everyone. I wish you a great evening, and as always, I'll see you in the next video. Ciao.